So one of the most important things for a lot of economies worldwide that they heavily rely upon is going to be consumer spending, right? Because if people spend money, that's more earnings for businesses, which they can reinvest back into the company, hence boosting the economy and growth. Well, what if the consumer spending drops? That's when things become a bit more challenging. What's going on, team? It's Caddy with Money Vesting. I hope that you all are having an amazing day. So in this video, we will be talking about consumer confidence and consumer behavior. So if you guys enjoyed this video, please make sure to drop a like because it really helps out with the channel and recommends this video to other people who might be interested in watching. Also, subscribe and hit that notification bell so you don't miss out on any future market updates, videos related to investing and technical breakdowns. So Bloomberg published a report today at 8 a.m. So I riffed through the entire report to put all that information in a condensed form for us to get a better understanding on the consumer behavior. So we will primarily look into 4 key metrics. The first one being the fear factor, followed by discretionary spending on things like toiletries, clothes, new appliances, and favorite foods. Then we will dive into social spending on things like concerts, music, movies, etc. And then finish it off with analyzing different generations in a post-pandemic world. Again, there's a lot of research that went into this video, so if you guys enjoy, make sure to drop that like button to support the channel. So when we look at the fear factor, this chart essentially represents how comfortable or safe do people feel at these different locations. For grocery stores, you can see that almost 80% of the people feel very or somewhat safe, as opposed to the 20% people checked not very safe or safe at all. That's the same with small businesses and big box stores, where more people are comfortable and or feel safe or somewhat safe as opposed to shopping in the mall. Now that's where things get a little interesting, because more than half of the people do not feel very safe at all inside a mall, but they do in a grocery store. So that would mean that less traffic inside the mall, hence less sales, resulting in lower revenues for the brands and or companies that are selling inside the malls. Now when we look at the discretionary item spending, almost 40% of people said that they skipped buying clothes during these lockdowns in order to save money. Almost 30% skipped on appliances, between 10 and 15% skipped on buying preferred brands and favorite foods, and just about 9% said that they skipped on toiletries. One of the things to note here is that how these percentages of people skipping is going down from wants to needs, essentially meaning spending on clothes is something that can be delayed as opposed to the bare minimum toiletries and essentials that people actually need. So the question to ask yourself is whether this is going to persist long term, or if this is something temporary due to the lockdowns, and when consumer spending picks up, we can see a higher percentage of people spending money on clothes and food. So just something that I wanted to put out there to brainstorm, and just something that we can ask ourselves if this is something that's going to persist long term or if this is just temporary. So now we're going to talk about the social spending. So this chart goes over how much people are looking forward to going to these places once stay-at-home orders are lifted and the economy opens back up. So as you guys can see, almost half of the people are not looking forward to going to a bar, just over 40% not looking forward to going to a sporting event, and just under 40% are not looking forward to going to a live show or a concert or even movies. So with this data, obviously the restaurant and the bars, the sporting industry, the music industry, and especially movies is going to be affected the most because of this shift in consumer behavior. Now here's a food for thought question. Are people not looking forward to going to these places in fear of the pandemic, or is this because we have actually found a valid substitute to these services? For example, streaming music and movies through Netflix and Spotify instead of physically going into the theater or concerts, drinking at home as opposed to actually going to the bars. Just something to think about, and let me know what you guys think, as I'd love to hear your feedback and whether this consumer behavior is going to persist over the long term, because we may have found substitutes to these services, or if this is just temporary due to the lagging fears related to the pandemic. And now finally, we're looking at different generations, and you can see how Gen Z is the highest in terms of looking forward to going to all these places, which makes a little sense because Gen Z is also the youngest of the 4 generations, and they want to, or really are looking forward to experiencing all these different places. So based on this analysis, we can conclude that there is a drastic shift in consumer behavior and how people are choosing to spend their money. So this right here is going to be the personal savings rate, and we have been following it in some of my previous videos. You can see how it skyrocketed all the way to 33%, which is the highest on record in history. The highest the last time we reached was 17% back in 1975, and since then that savings rate has been on a steady decline up until now, when the stay-at-home orders are allowing people to save majority of their income. Now, the personal income has also gone up due to the fact that people have been receiving these stimulus payments and checks, which are government benefits that is included in the personal income index. So this right here is going to be the personal spending or the personal consumption expenditures and how that has been going up significantly. And essentially when the economy contracts, so you guys can see back in 2007, 2008, when we had the global financial recession, the Great Recession due to the housing bubble, the consumer spending dropped due to a contraction in the economy. So people tend to spend less money when the economy is contracting. And you can see that's exactly what's happened more recently, going back as far as February of 2020. That decline was close to about 20%, and since then we have jumped in the month of May, going up close to 8% from its low back in April. So that jump has been close to 9%. Like I said, that we have seen an increase in consumer spending. The only question is whether we're going to go back to these levels and what those things are people going to spend their money on, because that is largely going to drive business moving forward, better or worse earnings for these businesses. And obviously stay-at-home stocks such as Netflix, Zoom Video, Amazon, Apple, Microsoft, those have been doing incredibly well as opposed to some of the restaurants, travel, and tourism industry stocks. Just something that I wanted you guys to be aware of, and we can start the conversation of how that consumer behavior is going to shift moving forward. So I hope you guys enjoyed this video and my quick breakdown of the consumer confidence and how people are responding to their spending and income. If you guys enjoyed this video, please make sure to drop a like, because it really helps out with the channel and recommends this video to other people who might be interested in watching. Also subscribe and hit that notification bell so you don't miss out on any future market updates, videos related to investing and technical breakdowns. As always, happy investing, and I will see you guys in the next video.